don't really say too much, but you'll see my screen. I like Jeevan, you don't really hear me. You just see my screen, you see me moving around. What I will do is I will write on the screen what I'm looking at. All right. Now, if you ask me a question and I'm available, well, of course, I'll answer you. Okay. But the reality is that I need to be trading London session. So from the start of this yellow box, which as you can see here is 7 a.m. So that means I've got to go get to the gym at 5:30 to finish off at 6:30 to get back at the charts. Yeah, which is not a problem, is what it is. All right. But I made that adjustments because I've seen how I can catch these trades in the morning. So let's have a look at this trade. I want somebody, is anybody confident enough to explain how I got into this trade here? And I will show you what the first trade is if you're a little bit confused. So I know my charts get a bit mad. No, this is my first trade. Here, number one. All right, and my entry, to be fair, was even probably smaller than this. But let's just give it around about this area. Who can tell me how I got into this trade? Who can take the reins, be coach for the day, and teach how I got into this trade? I'm going to give you a clue. It's not a brand new strategy that I've never told you about. That's the clue. It's a pretty big clue.
I'll attempt.
Go for it, bro. That's it, man.
All right, cool. So, how would I explain this?
You can draw on my screen as well. Yeah, you've got the ability to draw on my screen. Draw on my screen. All right. Let me know that you're fully activated and you understand, how I managed to get in this trick. Because there's no point. That's what I don't want it to be about me in the morning going, yeah, I just caught this and I just caught that, and then you don't understand how or don't have the ability to do so. That's just vanity. Yeah, I'm not going to do that. I prefer to say nothing and just, hit the belly. Yeah, I'm saying to you guys, I want you to understand how. So go on, go for it, Chief.
First of all, I'd say we could identify that we was in a premium from that trend line.
We already identified that we were in for the sell based on like going on higher time frames. So really, we were just waiting for an entry. Then we saw the market react from price. We could see that big. Look, where's the 10? You could see a reaction here. Yeah, which was our first kind of indication that the market might want to go in that direction. Then at this point, we're waiting for an entry for it to come back and tap in. Indication. Then we see the first leg appear here. This was the first leg of the M here. Yeah, that good drawing. I do it better.
So that again, that last drawing was all over the place. I'm gonna
How do you erase that?
I'll do your erasing for you. Okay, go on.
So from seeing that first indication of disbursement of price there, we see price come back up into this area where the arrow is. That's our first leg. If you put the line chart on, you'll be able to see it clearer.
Okay.
Yeah, that was our first leg. It's a bit messy, but you can see it. Then the middle leg, you can see price comes back in the middle. And then the top right leg of the M right there. Oh no, you can see it.
Well, I think you can see it. I'm not really with you with your explanation, but I think I'm going to delete some bits out of here, right? But good try, bro. Don't feel away. Yeah. Good try. Yeah. Now, anybody else want to go? Tell me how I got into this. Maybe now I flick to the line chart. It's a bit clearer for you. I don't know. How did I get that trade that says number one, which was probably about a $3,000 trade for me this morning, before you guys even came on the charts? And how did I know that the price was because when I said it was retracing, I made that mark immediately. I didn't know, it wasn't like I just did it. I did it in live. Yeah, somebody go for it.
Okay. It wasn't a premium. Previously, I think, was that another manipulation?
Can draw on my screen. You have. Let me give you guys some more screen because I don't want it to be the case that you guys are on us. Can't see what's going on. Let's give you some more screen. Let me even try and pull this down a little piece. All right, go for it.
So there was an untidy. Is it a manipulation M? There looks like a little bit of an M there.
Where? Show me where.
Okay, let me try and get into your screen. I'm using my phone, so
Just put a little line then. You don't have to go on too accurately. Just put a little line above so we know what we're looking at. Otherwise, we're working on telepathy.
just to the right of that.
All right. Just to the right of that. Okay.
Yep. So that's an M that was there, and then there was a big push out. And
So what do we call that? What do we call that push out?
A big displacement.
There you go. Language separates us from animals. There you go, bro.
Big displacement, and then it's retraced and it's tapped back in. And when it's tapped back in, you've pulled the trigger and you've got into the trade.
I'm gonna give you 10. All right. And then why obviously I could have stayed in trade because I still think this market's gonna come back down. But why did I decide to take my money down here? And how did I have an inkling that the market might be reversing or retracing?
Because liquidity is being taken.
From where? From where did the liquidity was taken from? Just put a little line.
First of all, it was taken from this level. I'm going to put this level over here.
Yeah. Okay.
So what time is that?
It's all right. We can see it. No problem. And then what happened to make me think to myself, yeah, maybe now the market may reverse.
You've seen basically a manipulation W. It's not a clean one, but it looks like an indication, correction, and continuation in the opposite direction.
I'm gonna give you 10. I'm gonna give you an A+ for your whole analysis. Well, let me break this down to you guys, okay? Because Jeevan was seeing it, was getting a bit confused with his explanation. Let me say the best way to learn is to teach, because you're on the spot and you actually have to think about what you're doing. You can't faff yourself into it. All right. Remember, guys, it's not just M's and W's. M's and W's are absolutely everywhere on the charts. I've given you guys some rules. Let's go. I'm gonna pull it up. If I can in a minute, I'll pull it up. You know our document that gave some rules. Okay. So the first rule is this. I've told you guys, I'm going to the gym earlier than I used to, because before I could come and slide in here at 8, something past 8, and because I was going to the gym from 7 till about 8, yeah? Now I'm there at 5:30 till about 6:30. Why is that? Because I want to be here for London session, which starts here at 7 a.m. So I got to be here beforehand to have a glimpse and see Wagwan. The first thing I do is I identify where the liquidity is. So these little lines where you can see it says liquidity taken or liquidity or whatever it may be, is me identifying where liquidity is, because liquidity for a small day trader like us, we're trading. We're not swing traders. We're not sitting in the trades for weeks. Yeah, and even then, liquidity still is a draw, but that's more to do with other things, fundamentals, what's happening in the market, the sentiment, etc. But on a small time frame, looking at day trade, we went on minute time frame. That is about liquidity. That is about little thieves in the night that want to lash your money and make your money their money. Yeah. So I saw that this market was started dribbling outside of Asian session here in Frankfurt, was dribbling, and it took this liquidity over here. Cool. All right. The issue is that my green flag hadn't signed yet. My green flag, which was London session 7 o'clock, had not happened yet. So I'm not in the trade. You understand? That's my rules. Yeah, a man that doesn't believe in something believes in absolutely everything and anything. So this is what I believe in. I believe that I'm going to wait till London session to see what's going on. Now, when London session hits, just before it hits here, this is like I'm watching it now because I'm at my charts. It's at 656, whatever maybe. This is a manipulation M, and someone said it's not a clean one. It's a clean one. All right. Let me tell you something. These charts are not going to give you what you're looking for straight out the textbook. This here is clean. That is clean. All right. If you don't think it's clean, I'm managing your expectations. That is a clean manipulation.
At first I said it wasn't clean, but then when I saw that big leg, I saw the leg after, and I was like, whoa, that was a big leg. That's why I used displacement. So it was clean. I retract that. All
good. You still got A+, bro. So if you're trying to get A*, stop being a cheat teacher's pet, bruv. It's dead. Yeah. You're good. Yeah. So Watch it. That is a clean manipulation M before I get my green flag. So imagine I'm in the sprinting blocks. I'm down. I'm like Usain Bolt. I'm ready to go. I'm in there. I cannot go until this green line here, this London session starts. But as soon as it starts, I'm looking to my left and I'm looking for that manipulation M, especially this one. Look at the displacement. Look at this candle. Zoop. Yeah. Jeevan, you know, he identified that well. He said he saw the big push out from here. This is the display. So let me get this right. I got a manipulation M. I got liquidity taken up here. London's just started. Imagine what's happening. Put your head in the space of what's happening. The London man are getting in at 7 o'clock. They start at 7 o'clock. They're sitting down. They've just come to their charts. They're getting ready to start smashing out the orders. They wasn't here over here. They was in the, getting a coffee, walking to work, doing whatever it may be in the lift. Then they get to their desk, sit around. They're ready to keep going. Yeah. So at that point in time, I'm looking left. When I look left, I see this big manipulation, and I'm like, oh, hello. Liquidity's been taken already. So they got the juice. You've got your Lucasade. You've got your trainers on. You've got everything that you needed to go. Liquidity's been taken from this little area. Okay. We see this manipulation M. I am waiting for it to tap back in. I'm flicking between, there because I'm looking for the wicks. I want to see it. Or if you don't want to look for the wicks with manual execution, you are going to put a limit order. You're going to go onto your trading view or wherever it may be, and you're going to create a sell limit. You're going to create a sell limit. That is going to be the limit order that's going to allow you. I think I'm missing another entry because I do want to get back in, guys. I'm not going to lie to you. We'll keep an eye on that. All right. Me trying to multitask again. All right. So, bang. When this tapped in here with his wicks, I'm in. Because this whole candle, let me show you the whole area, which is the target zone. That whole displacement imbalance between here and the middle point, or you want to say that, just to say wherever the displacement is, this is your entry zone, this whole green area. My entry was in here based upon the middle of that M. Have a look. The middle of the M. Yeah. Wherever that may be over here. To above these highs. Now, I could have been more aggressive and just taken that area, some more aggressive entry. I would have had more profits. But it is what it is. That tap in like that, tap in, especially when you start seeing it tap in and you see wick rejection. Wick rejection. You've actually got 1, 2, 3, maybe about a good 3-4 minutes to get into this trade. Yeah, it's not like I say it's a quick thing. So from a manual execution, you can get in. The joke is this. It even makes another manipulation M. This one's ugly. But it even makes another one on a 2-minute is cuter. Look. Well, it's not that cute, not that manipulation-ish. Yeah, but that was a manipulation M on the 1 minute and the 2 minute. This one that we saw over here. Okay, I'm in. I've got my green flag London session. I've seen my manipulation breaker structure. We've taken liquidity. The market's tapped back in. I am in. I'm also, the market's actually been trending and trading in this way bearishly. Yeah. On a bigger picture, we're going with zoom out. I am in. And where are my targets? Like I said to you, this market, in my opinion, should come all the way down here to capture Asian session low. I actually closed my trade out here, took the money because it's a game. I'm about bagging the grand. I bagged 3 here. And as soon as I saw this, because the liquidity, exactly what Jason said, it was below this little level here. There was liquidity here. This is where the market did something. Look. From here, the market did something. It was coming down here and then bang, something stopped it and it started pushing up. I'm not trying to say it's Asian session liquidity, but it's still liquidity. So as soon as that market took that liquidity here, I'm like, okay, I know what happens when we break structure, when we break below a level. What happens when we break below a level? What are we expecting? Somebody say it out loud. After we break any type of swing high or mountain top or valley, what do we expect?
Correction. Retracement.
Exactly, a retracement or correction. So I'm expecting that anyway. And I see a manipulation W, which is clean. It's not even not clean, it's clean. This is a clean manipulation W in here. And for all, if I really want to be honest with you, I'm actually in, which I don't care about because it's a very small, I'm in a buy. After taking this trade all the way down here, boom, capturing liquidity and seeing this, I'm actually in a buy knowing that it was coming up here. I don't really care because it's small. So what I do, and I'm going to tell you guys a flex, yeah? if you take a big trade and you prosper from your big trade, the next trade you take, especially if you're trying to play, which is what I'm doing is advanced. I'm trading backwards and forwards, which you don't need to do. Really, we only want to trade here for the sell. I'm just letting you know. We don't want to be in here for the buy. But I got in here for the buy because I knew it was pushing up. But I got in small. I don't care. It's risk-free. It's actually coming down to stop me out now. Yeah. But the reality is this. I saw this manipulation breaker structure W. I wasn't willing to sit in this retracement for it to keep coming down here, which I do think it's going to do. I'm taking my money here and looking for an entry. Hence the reason why you heard me just a minute ago, because I saw this on a 3-minute time frame. Yeah. I saw it tap back into a previous battlefield, which is kind of like around here, this whole little area. I'll make it a line, but it could be a box. Okay. It's a previous battlefield in here where the market couldn't break, sat back on top of this area, then pushed up, then couldn't break, and then pushed back down. This is a previous area. This whole little area in here is a previous battlefield. Blood was spilt over here. And then I've seen a manipulation M on the 3-minute time frame. I'm not really a 3-minute time frame done, but I'm looking at it. So I'm waiting to see right now. See the market's coming back here? We're tapping back into that 3-minute manipulation M because I want to get back in for the sell because I actually think this is going to hell. I just got out because I wanted my money down here. I prefer to have my money in my pocket and then have the option of me getting back in than me, watching my $3,000 go backwards. Well, I don't want to watch it go backwards. I told you the aim of the game is about taking money at the markets. It's not about being a guru and saying, yeah, I knew what it was doing for the next 6 months. Who gives a damn? Nah, I don't. So right now, I can do two things. I can hit the button now because it tapped into that M, which is a little bit higher risk because I did identify some areas up here the market could kick up in. Yeah. Or I can do indication correction continuation, which is me waiting now for a closure below this wick. I can do it aggressively to the tune of 3.5 pips if it doesn't push up anymore, or I could put it safer above this high to the tune of 7 pips. That's what I'm waiting for. Because after I take a big trade, even though I will take the next trade that has to be small. Let me show you why. This is from my experience. The experience I have had is this. I take a big trade for $3,000, I'm over the moon. Maybe the lot size was big. Let's imagine it was 20 lots. Yeah, or 10 lots, or whatever it may be, 10 lots. Yeah. And then I'm just in the zone now. I'm thinking to myself, flipping, no, I'm the guru. Do you know what I'm saying? I take another trade, big, and I give it back. All right? Especially if I'm taking it advanced on the basis that I'm trading with the flow of the market, i.e. I got into this buy. If I was just as big as I was in this buy here, I would have killed it. I would have actually stopped myself out over here and taken my money because I'd have been up about 1,500. Yeah? But I didn't. It's a small position. I'm still in it. It's like $100 and something. That's how small it is. Yeah. Now, why did I do that? Well, just in case the market's doing a madness and starts to push up and break what I think it's going to do. I think this market's coming down here and going to hell. But if it starts to do a madness because I don't know, there's some news or the market's schizophrenic, I don't really know. Then I've now got a position where I've got a float. I already have $300 in the plus so that I can take a bigger position. Yeah, that's called hedging. That's called managing your trade. That's called, this is the way I trade. It allows me to be aggressive when I've got a bit of a float. Even if that float is $300, that means I'm $300 up. So if I'm willing, say for example, if I take a trade and it's quite a big lot size, I can move my stop to my other trade to $200 and I could actually make that other position a bigger position. I can make that other position a $500 position or an $800 position on the basis that worst case scenario, it's only going to take away from me $800. Sorry, let me make it $700 position. It's only going to take away from me $500 because I'm banking $200. I've got a float. This is an example of how I can get quite aggressive. This is more advanced and not something you need to worry about right now. Worry about getting into your trade and then trading away from where that energy was from the start of London session. Look, the energy was from the start of London session was taking the liquidity up here prior to in Frankfurt and then trading away. I want to stick with that narrative until we capture major liquidity on the opposite side. And major liquidity for me would be below these Asian session highs from we saw this massive push. That's what I want to do. I want to trade away from that energy. Yeah, until we've captured that liquidity and I'm looking on things in the bigger picture, I want to trade away from that. EUGU, I'm bearish anyway, as you know. Yeah. But the reality is like that is it. It is not a strategy that I'm holding back from you. I'm not telling you guys what I'm doing. This is what I'm doing. but it's about risk management. And more importantly, I was talking to Jeevan the other day. It is about being able to pull the trigger. All right. If you've managed your trade and you've done, how do you manage your trade? Someone's asking. You're going to be using this. And look, if I lie, I fly. This is always open for me. My cashback Forex calculator is always open. It's not something I open occasionally, just when I'm chatting to you guys. Let me just, let me pretend I'm doing something. Guys, I'm taking a jab in the GU for a sell. I'm taking a jab. Okay. What does that jab mean? It means I'm not going uber hard. I'm going, medium hard or softly. All right. I'm not really going a high risk getting in. All right. Like this, what I've shown you, how we got in here for this trade, really, to be fair, for me, I could just say I'm done for the day. I can say I'm done for the day. And that is actually an important skill, to say I'm done for the day. I'm not saying that, but I can say I'm done for the day. This trade for me was about, I think it was a 1 to maybe 9 trade. Yeah, but by the time I closed myself out. Yeah, because I think my entry was a little bit more aggressive than this. Okay, let's say 1 to 8, 1 to 9 trade. All right, I got in there. And then I took a little position right now, which is actually still open, but it just stopped me out now for about, $50, $30. Okay. On the basis that I was just confirming how inside the charts I was to be able to identify that we are reversing right now. When I identified this reversal, wasn't like after it started going up here. Jeevan was on the call, and I identified that reversal about here. As soon as it took liquidity and I saw this break instruction manipulation W, that's my strategy. So I can't ignore it when it's showing me the same thing in the opposite way. As soon as I saw it, I was like, I'm taking my money, bro. I don't even care if I make a mistake and it pushes down. I don't care. It's given me and it's shown me what I wanted to see, what I need to see as, to let me know that there may be a change in direction. And Jeevan actually took it a bit deeper than that, which I liked. He said some stuff about the candles, which was true. Guys, when you see candles like this, with no wicks, but squaring off like this is a reversal candlestick pattern. It shows indecision. It shows like a battle. It's like man are pushing, and they're both pushing as hard as they want as each other. I'm pushing in one direction, someone else is pushing in another direction. That's what's happening here. So I'm seeing all of this. I'm seeing break structure W. I'm seeing all this. I'm seeing liquidity just taken out. Straight away put an arrow in here that says reversing and retracing, slash retracing. And look what it did. Brrr. And let me show you something else. Let me glue some things together some more. Have a look. And this isn't one I made earlier. This is this morning. This is just me doing it in live in the mix. Where did the market retrace to?
50%.
50%. Have I told you guys about 50%? So I'm not trying to say that it's always going to retrace to 50%. That's not what I'm saying. But I'm saying we're getting all of these confluences. We're getting all of these things that we understand, that we've learned about, that we've got education in, that we've got understanding on. You have to be nimble and you have to get the hours, put hours under your belt so that you're able to see these things in real time. This takes time. This doesn't take I'm going to do this trading thing once. I'm going to look at the chart once a week. It's just like anything. I've been off the gym for a few weeks. Everything's heavy in the gym. Everything feels difficult. Yeah? It's just how it works, guys. You have to stay limber. Did you watch the veterans play the other day? Man United played, who did they play? Man United played Scottish team the other day. I don't know if anyone saw it. Had Rooney playing. Did anyone see it? Yeah? It's the veterans match.
No.
These guys are massive. Rooney's massive. Belly's hanging over his pants. They had a couple man playing. I think Berbatov were playing. Look. Rooney did score a banger of a free kick. But them men are not who they used to be. They haven't been playing football. They've been in the pub. Yeah? They've been eating, haggis and
fillet steak.
Fillet steak and drinking Guinness 6 times a day. Them men are not the same. That's why professional footballers train every day. Or at least how many times a week? To stay sharp. Yeah? So even if you're not trading, you're supposed to be having a look. You're supposed to be going, you're supposed to be back testing. You're supposed to be seeing something like, I saw that. If I was trading, I would have caught the lick. Yeah? Don't hurt your own efforts. Do you get what I'm saying? Like, if you're not training football every single week, the coach can't play you on Sunday, bro. I ain't seen you for 3 weeks. How am I going to start you? How are you going to think you're going to come into these markets and smash up the place? You haven't been present, or you haven't been trading, you haven't been looking. You have to, because all of these things that I'm pointing out to you, I'm seeing in real time. I immediately knew this was 50%. I could just see it. Before I pulled out the Fibonacci, I could see this retracement as 50%. I'm talking to you. And the same time I'm talking to you, I'm glimpsing over my right shoulder and I'm saying to you, guys, I'm going to take an entry in here. There's something I'm looking at. I'm in right now. My shit's in the blue. I'm $400 up whilst I'm talking to you. Because even though, like I said to you, I'm looking here, I'm seeing manipulation M hit right here. Look, my same strategy. Now, this is different because it hasn't taken liquidity. It took liquidity up here. Remember, my overall energy is this market. I could have just stayed in this trade from up here. I didn't have to take my money down here. I'm seeing the market come down here. I'm seeing it make a 50% retracement over here. I'm seeing a manipulation M at my 50% retracement after it's closed in balance. I'm in the game. I'm $700 up as we speak. This isn't because I'm stunting. This is because I'm true to the game. And I've been here. And I've been in it. And everything I'm showing you and I'm saying is not anything that I'm holding back. I'm not saying, oh guys, if you want to find out how I got into this trade, all you got to do is buy my advanced course. Which there is an advanced course. Yeah. But I'm saying to you, there's no reason, and you know the joke is? The way I further define that is I got on the call when I said, you don't tell me how I got in the trade. And Jeevan, who's been here probably least, but he's been putting in work, as well as Jason, told me exactly how I got in the trade. So there's no reason why you couldn't have caught the same trade. And that could have been your live account. There's no reason why. Let's just imagine that you had, I don't know. And remember, this is the one thing you have to understand as well. I'm trading small because this particular account is my funded. So I stay small. Well, to be fair, I don't stay that small in it, but I am staying small. If it was my own 100K, this would be $1,000 trade I would have risked. Yeah? It would have been $1,000 trade. It was actually about a $200 or $300 trade. If you want me to be completely transparent. Yeah? If it's $1,000 trade, that means I just caught what? $9,000 this morning. Good night, God bless. Huh?
Off.
Yeah, that's it. I mean, and it's not like $9,000 today. I caught $9,000. It's not even 9 o'clock yet, and I've been talking to you for half an hour. We caught $9,000 if at 7:45. So the point is this: whether or not you're catching it, and it was your live account, whether or not it's your funded account, whether or not you're in demo, you have just illustrated to yourself that if that was your own funds, which you may have your own funds, you may not put 100K in an account, but you might put 10K in an account. That was still a $900. Let's round it up, $1,000 trade before 7:45 of your live funds of a 10K account. I know a lot of people here got 10K. You may have 10K sitting down there in an account. You may have substantially more than that. I don't know. But just understand, if you understand the strategy and you're confident enough, you've just made $1,000 at 7:45. Now, I don't know what jobs your bedrooms work, but I'm going to guess that majority of them don't clear $1,000 a day.
Before 7:45.
So if you're clearing that at 7:45 to the point where you could turn and say, you know what, I'm done. What does your life look like? This is why I said to you, this can change your life. Not because it means you're going to make $1 zillion, but if you can catch $1,000 at 7:45 out of a 10K account, meaning that you only risked $100 and you caught a 1 to 10. What does your life look like? Like, what are you doing for the rest of the day? Are you going to work and having your manager chat fraff to you for $250 or $300 or $400 or whatever you make a day? Why? When you could have the whole day doing whatever you wanted to do because you're able to catch $1,000 before 8 o'clock in the morning. Not by magic, by strategy, by risk management, by putting in a little bit of work. Look, that trade's still running. And I believe it's going to continue to run. Now, if it kicks back on me, does a madness and stops me out, I do not care. That's the game. It's like, it's the game. If you spar in Mayweather, it's possible You might throw out a little jab and catch him on his nose because he's in the ring. He's in the ring with somebody. Even if you just close your eyes and start swinging your arms, you might hit him. So me taking an L, taking a loss, losing this trade, which I don't think I'm going to lose, which I actually can't lose because I'm going to make it risk-free in a minute. Okay? Have a look. Like, and this is, like I said, I heard these people talking on the podcast. It goes, yeah, man, it's one thing that these people putting out stuff on the Instagram. It's something else when they're doing it live. I'm doing it live for you every morning. Like, we hitting here. This is the entry. There's somewhere in here. We're down here. We're breaking structure. I'm expecting to see some sort of retracement, but maybe because the market's already done a big breathe in, we might just go for it. To what angle? To what degree? Maybe to get to touch the bottom of that line there. Maybe. That's just taking into consideration trend lines, which are not set in stone, but it's a guide. So I'm sitting here right now. What that guide means is if I get down to this line over here, I'm going to be thinking to myself, boy, I've had a really good run. We broke this structure, we didn't retrace, and we kept pushing, but now we're down to the bottom of the range. I'm going to be expecting that maybe here, if I start seeing this market kicking back in this direction, that we're going to be making some retracement. I actually believe that this market is going for, at minimum,
The liquidity.
the liquidity. Say it loud, my bro. Say it loud. I'm proud. Liquidity. All right, because prior to this, prior to understanding liquidity, prior to understanding the unity strategy, you was getting into trades and not really knowing where you want to take those trades to. I'm four figures in that trade.
In the first place. Or why we was getting into them in the first place.
That's right. I'm four figures in the trade. Well, I was. It's kicking back now. 9, 8, 9. Well, anyway, you get my drift. Yeah. I'm looking at this right now and I'm like, rah. This is the whole point of this. It's not a stunting thing. I'm not here to stunt. Believe me, I could do the stunting thing without being here on the Zoom thing. We can go on, yeah. But this is about understanding that. Can you read this language? I'm not going to lie to you guys. I don't speak any language. I speak English, Cockney, and I know when my mom's cussing me in Patois, yeah? And a little bit of GCSE German, yeah? I don't speak another language fluently. So therefore, and it's something that I want to do. It's on my bucket list. I'd love to be able to go somewhere and the restaurant man speaking French, and me to just go and have a whole conversation with him in French, and then someone from the other table speaking Swedish, and me to go and speak, or someone speaking German, and me to speak fluently German, or Twi, or speak another language. I would love that, but at the moment I can't. And I know if I want to learn how to if I want to speak French, I'm going to have to learn the language, learn the alphabet. Learn the phrases, learn the vowels, learn how they put their words together. But let me tell you something, what I do know, what language I can read candles, yo. I can read these markets. Now, does that mean that I get the interpretation correct every single time? No, because I don't live in France. So I'm not perfect. Sometimes I can get it wrong. Sometimes I'm thinking it's going to go up, it's going to go down. And then I'm like, okay, I'm taking this trade for a saw, and it starts going up. And all here is confusion, because I'm not French. But when it breaks structure, I go, okay, cool, we're going up. When that person actually corrects me and slows it down in French, I go, oh, okay, that's what he's saying. Okay, if that's the case, and I string together a couple words that I know, and I continue the conversation. Like, this is what we're trying to do. We're trying to learn this language. And like I said to you, I hope that, you know, you're feeling a little bit more comfortable, a little bit more confident with the language that we're learning. That's my point. Yeah, if my point hasn't landed, that's my point. Forget about the money. Forget about me hyping saying this 2-8 up. I'm like, this is just nonsense. Forget about all this crap. That's nonsense. It's about you. Like, are you learning something? Can you see what I can see? If you can, that's it. That's all you. That's all you need to worry. And then once you can do that, once you see this, which I'm sure you lot saw because I've asked you in the morning, you saw how I got into this trend, this trade. You saw why I thought it was going to turn around. You saw why the retracement happened from here. Yeah. From time you can get international calls, man, bailing me down. Yeah. From time you can see, yeah. Then that's it. That means you learn the language. That means we can have a conversation. That means you can go to France and have a good holiday because you understand when man is talking wicked about you. When you're in the cab and man's setting you up because they're going to take you to some next, you can hear. You're sitting in there quietly, but you can hear what everything man's saying. You've seen them films where someone walks into the room and the enemies are talking their language and because they think the black guy doesn't know the language or they think the white guy doesn't know the language. And then he speaks back to them in their language, says, I actually don't think that'd be a good idea because I've got my whole man them outside. Am I like, rah? Am I like, wah? You know the language, wah? But that's what you want to get to with the trading. Can you read these candles? Can you identify where an entry is? Can you identify where the exit is? Do you understand how to manage your risk? Do you understand how to scale in? Do you understand the emotions of you're going to be in a retracement, yeah, and how that feels? Like I'm in a retracement now. The market's retracing. I don't care. I don't care for a few reasons. One, because it's risk-free, and two, because I'm expecting it to retrace. Market's moving waves. This market's not going to go brrr, all the way down to my target. It's going to take the piss. It's going to go like this. It's going to go like this. It's going to come like this. It's going to pretend it's doing something else. It's going to do this. It's going to do this. Like, I get that because I've been there so many times. And worst case scenario, it's going to do this and it's going to stop me out. And even if I wasn't risk-free, who cares? Because the money that I put out, I'm willing to lose. Do you care when you go outside and your daughter, your son, your niece, whatever it is, goes, can you buy me a packet of crisps when you go to the petrol station, please? You're going to the petrol station and say, oh, can you get me a packet of crisps? Do you care the fact that, you just, even though crisp ain't cheap again, yeah? I see crisp for £1.50, £2, and them kind of things, yeah? But is it really hurting you? Is it a flex that you just went and spunked crisp money? It's not a flex. Because you're willing to lose that money when you left your house. You're willing to spend a certain amount of money on snacks. You're willing to spend a certain amount of money on food. You're not going to go out just on a random trip to Tesco's and go and spend $2,000 on food, getting some different kind of cut of steak and golden sprinkled chips, and you're not going to do that. You're just not willing to spend $1,000 on food today. No way. Maybe you're not willing to spend $1,000 on food ever. But you're willing to spend money on it, Chris. Why? Because you're willing to lose that money. This is the same thing with trading. You should be willing to lose the money every time you take the trade. If you take the trade and your anxiety levels are high, your hairline's going back, your mouth's dry, you keep looking at your screen, you keep wanting to move your stop loss, it's because you're too big. You're not willing to lose that money. You're too concerned about it. Remember, as soon as you take the trade, the rest is on God. It's nothing to do with you. It's not like if you pedal faster, if you shout louder, if you pray hard, like you're going to make the trades go down. It's got nothing to do with you after you've hit the button. So all you can do is manage to have an edge. The edge is your strategy. Be disciplined. The discipline is all the things that your strategy is telling you to do. And sticking to that. Because you can have a strategy and you can do the opposite. Manage your risk and then hit the button. And if you're not happy with your profits after here, if you wasn't happy with your profits from here to here, or from here to where we currently are, it just means you need more money. You need a bigger account. It doesn't mean you need to change anything. You just need more money. This needs to be a 1 to 8 trade of £1 million account. Because your 1 to 8 trade of your $1,000 account and you only risked £1, that £8 that you just pocketed doesn't really hit. Doesn't hit the way you want it to hit. Or furthermore, let me not even say that if it's your own money and it's your $1,000 account, maybe that you made $80. Maybe you started trading $10 risk and you just made $80. That $80 doesn't really hit the way you need it to hit. But $80 is $80. $80 before 7.45. It's not bad. If you don't like that, put a zero on your account. Okay, $800. Okay, that hits a bit better. If you don't like that, put another zero on your account. All right, $8,000. Okay, that sounds all right. Now I can go buy a big chain, but you don't need to change anything else. Everything else is perfect. Yeah? Guys, any questions? It's 9 o'clock. Any questions you want to ask me about what it is and about your trading and about the journey? Any questions? Let's have a look right now and let's tap into what's happening from a news perspective, because there is red fog news today.
Grand Rising, or can you hear me?
Yeah, we can. Good morning, my brother.
Yeah. Sorry, I was away. I've been away. Just come back.
Lovely to have you.
As you said, I still was doing my thing because you never stopped.
Come on.
And CPI today. Big. Yeah. US CPI today at 130. Yeah. It's the big one just before the Fed decides what they do next week. Yeah, believe they're going to cut by 25 or 50 basis points. However, depending on how the CPI is today. So market will be volatile at 130 or just before.
All right. So Al, we've missed you. Giving us some insights on certain things. We've been watching the news. We've been seeing, because like I said to you guys, there's two different ways. Let's say this. I'm not a fundamental trader. I'm a technical trader. However, I understand that fundamentals move the market and drive the market. So sometimes if I get in a trade and the market's moving a bit mad, or I'm looking at it to go and give my entry, it's moving a bit peculiar. I'm like, why is the market moving like this? And I go and look over at my news and I see there is CPI coming later, or there's non-farm payroll happening, or this. I go, oh, this is why you're misbehaving. You see my youngest son. In fact, both of them. If we go to Nana's, it's my mum. There's Nana and Nanny. Yeah, it's two different ones. They start acting up. If I'm not there, I start getting phone calls about them acting up. I know why they're acting up, because they're my mums. And my mum's is laissez-faire with them. Yeah, lets them get away with murder. But that's why they're acting up. That's the reason. Because if I was there, it wouldn't be happening. Because I'd be tossing out backhands like, what's his name? E. Honda from Street Fighter. Everyone be getting a slap. Yeah? So I'm saying to you, the reality is that the news can allow us, even from a technical perspective, to plan our trading. Because now I'm thinking to myself this, okay, 130 is going to be inflation rate news. So there may be opportunities leading up to 130. No, remember, market's open at 230. But there may be opportunities for the whole day leading up to that. And then maybe when the core inflation hits, it might be crazy. And I might maybe not want to get involved. Yeah. Oh, sorry, let me say that again. I may want to be able to get involved leading up to that. And depending on how the market moves, the volatility, if it moves in a mad direction, then when 230 hits, I can be like, okay, now the New York's open, they're going to go and come and correct that problem. Or they're going to come and volatility is going to come and close that imbalance. So it can give some insight. See, whereas there are fundamental traders who don't really care too much about technicals. They're mostly about the sentiment. And more times out of 10, they trade on a larger time frame. And maybe they're even traders who trade stocks as well. Because from a fundamental perspective, if we had some issue whereby all of the computers across the world blew up because there was some crazy, virus that blew up everyone's computer. Well, apart from the manufacturer, Nvidia, and Microsoft, all these kind of companies that everyone's going to have to run out and go and buy new computers, that's going to make their stock go up. That's a fundamental factor. They're the only people that's producing computers in the world that, for whatever reason, everyone nicked their computers. The computer blew up. They're going to, that stock's going to go up. Regardless of what your technicals are saying, man, I have to buy computers, bro. And that's probably a poor example, but the point I'm making to you is that there are fundamental things, especially like, say, for example, I don't know, when wars kick off, COVID's a prime better example. In COVID, nobody was going anywhere. We weren't allowed to go anywhere. So if we wasn't allowed to go anywhere, how can oil prices be going up? I don't care what your technicals are saying. You tell me there's a manipulation W here. Bro, oil prices fundamentally I'm not going to be going anywhere because nobody needs oil right now. So man are sitting there with barrels of oil saying, yo, do you want a barrel of oil? I said, for what, bro? Unless I can drink it or wipe my bum with it, I don't need it right now in COVID. But soon as COVID let up, soon as man was like, oh, this COVID stuff is absolute fraff, and man's been sitting in their house doing nothing, having to deal with his wifey that he hates, or having to deal with the kids that's sending him crazy. As soon as, there was an opportunity to leave, what do people do? They're in their cars, they're traveling, they're going on holidays, they're doing this, they're doing that. And we saw the oil price go from, crazy lows in COVID time to just go through the roof. Just go nuts. This man want to travel now. Now we need oil. Look. You see this little situation over here is COVID. 2020 to 20 around this kind of time here, it's COVID. This fundamental reason meant that if you had dough and you was a savvy investor, what was you doing around here? Somebody tell me.
Buying.
You was buying, yo. Because you come to the conclusion, unless this end of the world, and if it is end of the world, we've got bigger problems. Yeah? You know that at some point, COVID's going to end. At some point, all the cars that are parked in the drive and no one's going anywhere, people are going to start driving them. At some point, all the planes that Boeing paid massive money for, that's sitting on the tarmac, they're going to have to start flying again. And if you bought your oil down here, oh my, wait a minute, I'm way off. I'm way off. If you bought your oil down here from a fundamental perspective, you didn't only get it discounted, you got it like, you stole it. Forget about you bought it at a discount, you stole it. Because all from there, look at this. This is showing about what? Is that $9 a barrel? $10 a barrel? All the way up to what over here, this high, 128. This is say, what is that? What, 13x? 1,300%. You do the math. If you decided to slap in 100 grand down in here, or 10 grand down in here, you'd have been all right. You'd have seen some growth. You'd have bought a big chain saying crude oil, or saying oil like that, with diamonds in it, oil. Yeah, that's a fundamental reason why that market's going to continue going up. Now, of course, you could, as a day trader, intratrader, take in, a little buy here, a little sell here, a little sell here, a little. But overall, fundamental traders are going to be like, listen, I'm buying crude oil. Sorry, I'm buying it. I don't care what you're talking about, I'm buying it. Yeah, guys, amazing day. I hope you learned something today. This session was recorded. I'm going to label it also because I'm a bit bad with the whole labeling and stuff. Remember, there's going to come to a point where I'm going to wipe all of that stuff off of the internet, off of YouTube. Yeah, I'm going to have some little shorts up to drive traffic to the site. But the whole strategies and all the blessings that I'm giving you right now, it's not going to be out there for free for everybody. Yeah, but for now, for the family, I'm giving you my keys to my house. Saying to you, bro, just respect it, but it's yours. Do what you're doing. Yeah, so I'm gonna wish you guys an amazing day. The GU is making a little retracement right now. I don't really care. Is what it is. I'm still gonna be bearish on it. Okay, I'm still gonna be bearish on it. I'd like to see the market come down and capture some liquidity. All right, below, which is this green line here. I would, but to be fair, I'd actually like to see it grab that liquidity and then just drop off the face of the earth. Yeah, I'd like to see it from a bigger picture perspective. Sorry, have a look. See what this yellow line here and this white line, we did push up above this little white range here, all of this energy here, but I'd like to see the market really getting down to this yellow line. That's my bigger picture, bigger plan. Yeah, we are at the bottom of this little orange little range here, and the market could decide it wants to come up here first and then start coming down on a kind of sideways energy on this energy. It could definitely do that. Don't get twisted. The market could definitely decide to just do this towards that yellow line. Could do. But I'd like it to jump out the window and get down here a little quicker than that. and we shall see if it happens. If not, we manage our risk and we don't care that much. All right. So I'm going to put on, and that's what you have to get to, guys. Have you ever heard the traders turn around and say, you know, the trades that you don't, when you don't care a bit, like you kind of got to not care. It's true. You kind of got to be in a position of like, this is just a job. It's just like you, like, do you care of whatever you do every day for a job? It might be really significant for somebody. You might work in with people, you might work with, but it's like you haven't got that much, like, it's like jumping out of a plane's cack for you because you do it every single day. You don't really care that much. It's not that big of a deal. When you learn this language, you take in these trades and executing, and whether you win or you lose, it shouldn't be a big deal. Why? Because you should be managing your risk. And why? Because you should be able to understand that you took the trade based upon a set of rules. So if those set of rules were wrong for whatever reason, then it is what it is. I want to play a video today by Abdullah Rashid. He's a trader, a black guy from America. He's got good content. Yeah, a little bit more serious in his approach and whatnot, but he's got good content. He's got a video that's come out that says how to make 10K a month ASAP as a day trader. So let's see what he's got to say. But I'm going to close the live recording for people that are watching at home. I hope you've learned something. Do like, share, and subscribe to